I certainly think investment principles do not stop at borders. So if I were investing in China or any place else, India, UK, Germany, I would apply exactly the same sort of principles that I learned from the intelligent investor. I would think of stocks as a small piece of a business. I would think of investment fluctuations being there to benefit me rather than to hurt me. And I would try to focus my attention on businesses that where I thought I understood the competitive advantage they had and what they would look like in 5 or 10 years. So I don't think I would change the principles at all.
Well, the Chinese have a history of being very entrepreneurial and of gambling very heavily when they have the opportunity. And it has created great volatility in the Chinese stock markets. And when things get bouncy and prosperous like our internet craze here in the United States, China looks a lot like Silicon Valley. I think China would do way better to be more value investor minded and less absorbed in waves of speculation. So I think the more China copies the way Berkshire operates, I think the better it'll be for China.
Yeah, there's a certain irony in that we would do the best over decades if we operated in a market where people operated very foolishly. And the more people respond to short-term events and exaggerated things or anything that causes people to get wildly enthusiastic or wildly depressed actually is what allows people to make lots of money in securities. And on the other hand, it's not the greatest thing for a society. And Charlie and I have benefited enormously by the fact that over a 50-year period, there have been a few periods, probably the most extraordinary being 1973 and 74, where you could buy stocks unbelievably cheap, cheaper than happened in 2008 and 2009. And it doesn't make sense to have that much volatility in the market, but humans behave the way humans behave, and they're going to continue to behave that way in the next 50 years. I mean, if you're a young investor and you can sort of stand back and value stocks as businesses and invest when things are very cheap, no matter what anybody is saying on television or what you're reading, and perhaps, if you wish, sell when people get terribly enthused, it is really not a very tough intellectual game. It's an easy game if you can control your emotions. And as Charlie says, that he thinks, we've talked about a little bit, that the Chinese market may be more, there may be more speculative influences in it even than in the United States, because it's a relatively new development and it may lend itself to greater extremes. And that should produce great opportunities. Charlie?
Yeah, but there are great opportunities for excess and nasty contractions after unnatural booms and so on. I think China is wise to dampen the speculative booms, and I think the Chinese, I don't think the value investing will ever go out of style. Who in the hell doesn't want value when you buy something? How can there be anything else that makes any sense except value investing?
It never gets that popular, though.
People are looking for an easier way,
Yeah.
and that's a mistake. It looks easier, but in fact it's harder. And there's a lot of misery to be obtained by misusing stocks.
Yeah. Nobody buys a farm to make a lot of money next week or next month, or they buy it, an apartment house. They buy it based on what they think the long-term future is, and if they make a reasoned calculation of that and the purchase price looks attractive, they buy it, and then they don't get a quote on it every day or every week or every month or even every year. And that's probably a better way to look at stocks.